Good evening. This is the Elliott wave update for the S&P 500 for Thursday, November 11th, 2021. Today was a holiday here in the United States. It was Veterans Day, and so many traders and offices were closed in honor of the veterans that have served in the military here in the United States. The market continued to trade, and they were decent moves, but it was light volume. So the absence of traders was well felt in the market today. But I believe that it does continue to work towards supporting that the highs are in for now, and we have begun what will ultimately end up being a little bit of a longer term corrective phase. And now we're in the very beginning. And as I said on previous updates, I am starting this count down on a minor degree level. And so what I'm initially looking for is 5 waves down. And 5 waves down in an opposite direction from a trend, right? So the trend thus far has been up, but as soon as we get 5 waves down on an hourly chart, 5 waves down in an hourly chart, not a 5-minute, not a 30-minute, an hourly chart. And then we're looking to go up to the 4-hour and then to the daily to give additional confirmation. So, but so far, I can count on a minor degree, waves 1, 2, 3, 4, and we're in that 5th down. Now, as I had left it yesterday, I had felt that we were subdividing within this, we're in the 3rd, and we were subdividing inside there, producing a 1, 2, 3, 4, 5. So it did subdivide, but I thought it was subdividing even twice inside. So we do have the minute, which would be the minute wave 1, 2, 3, 4, 5 to complete minor wave 3. Then we had a 4th wave, and that was today's activity. And as I left yesterday's count, I was counting this as 1, 2, 3, a little 4, 5. And that would have completed the 3rd, and then a 4 and a 5. So the minor 4th and then a minor 5th. That all happened within here. And so I can go back and I can find it. But one thing that I want to show that really does kind of clear a lot of this up, I dropped it back down, and I've done this before and I've talked about it. I've dropped it to the line chart. Now the line chart is more on a closing basis, and it takes the tails off of the moves. So in essence, if you're a trader, you want to see those tails because you want to see the extreme that it'll go from a particular point. So where either value is or where they all met, but where things can get to an extreme and snap back. So, but on the line chart, again, here's the high. And here we have 1, 2, then it breaks down. 1, 2, 3, 4, 5. And that is 3rd, the minor 3rd. So the minor 3rd divided into its own 5-wave structure. So it just and in this case, it basically was just a simple wave 3 breaking into 5. And so when we're looking for that extended wave, which obviously was not wave 1, and it may be wave 5, right? So remember, under Elliott, the guidelines tell us that in an impulse wave, which is counted in as a 5-wave structure, between waves 1, 3, and 5, within that impulse, one of those waves will subdivide and extend. And that normally takes place within the 3rd wave of 1, 3, and 5. So in this case, within 3, it did not. So I will look for it again in wave 5. Does not have to happen, but it is not uncommon. So 1 didn't, 3 was normal, 5 may extend within its 3rd wave. And that could push things down quite a bit. So let me go back and I can talk a little bit about what we should be expecting from here, according to this count. So I am now looking for this to develop into its own 5, and then within that 3rd wave within this 5, I will look for that to even kind of accelerate a little bit bigger. So extend, And that could push things out to next support for this whole move, or this particular third wave. And let's just open it up from here. Now we can see here we are way up here, and we have support for this coming in. Basically, I think we could end up down here, 45.84.50. That's where I think this fifth wave could take us. Now, for it to get there, that is about 46 and 20, 60 points for here, exactly 60 points. And the S&P could definitely fall. Now, will it do it tomorrow? Very possibly it could. Again, today being a holiday, I don't know if a lot of people attached Friday and just going to make it a long weekend, or if most of the trades are going to show up, because tomorrow is once again an expiration, not a major expiration. The November expiration, the monthly, is a week from tomorrow. And then we run into Thanksgiving. So I'm already believing that, some of the positions are going to have to be wound down, et cetera, et cetera. But back on the board in play is Tesla. So Tesla, I think, will continue to dominate a lot of the moving, because if the sellers are continuing to show up, i.e. from Elon Musk or whomever else is deciding to sell with Elon Musk, that could drop it back down. Now, we did rally coming into the day. They pushed it all the way back above 1100, but it got back down to, I'm not sure the exact low, but you can see where it closed at 1063. So that's going to continue to keep volatility in both the NASDAQ and the S&P. Also in the S&P, we have Apple, we have Amazon, we have Google, and we have Facebook. So these all come into play tomorrow, and they've been in expiration plays now for several weeks. So I anticipate that that's going to continue at least through tomorrow. So, but the volatility, I think, could really get picking up to the downside, and that I think could be a surprise to the market. So I don't think they're ready for a continued slide for a reason they believe is over. So they think, oh, all that tax selling, that's already happened. That was just a one-day thing, and that all took place. It's like, I don't believe that. And so whatever. But the deal is that I believe the market can go down. And according to the Elliott count and the labeling that I'm using, it should. So what we should be expecting from here is a move down. Ultimately, it could drop into right there. And that's just the previous fourth wave. And that's how I'm measuring support levels coming off. Things tend to go back to fourth waves. So as this starts to come down, I'm looking for it here, and then I'm looking for here. And you'll see that they usually wrap themselves around some Fibonacci. This is not, because it's a starting point, so it's 100%. So if this whole structure drops down to that level, it's just equal to that final fifth wave up. Okay. But that's not how I'm going to measure it. I'm measuring it by 5 and then a 3 and then the next 5. So, but for this one, for this first leg, I think ultimately we may get down to 45.84. So that means that our next levels, we're going to be huddling around this 200 moving average again, right? Close below it, grabbing it back after hours, and that could just put some life back into the party if they start getting back above the moving averages. You see here, they got above them, they stayed above them, they tested it, it didn't work, and just take it right up and just keep on going. Then you saw this, look at the struggle. Every time they attempted to sell it off, the buyers were right there to move back. So we still got a lot of play there as well. But I am thinking we're going to go down. So we have support at 46.33, 46.22, and then look where it gaps. It gaps all the way down to the bottom of 4. But it can really halt itself anywhere in here, and I imagine there will be plenty of support around 4,600. So 4,600, 4,610, probably a 510. But it has support all the way down, and then ultimately where it could stop here. And that may be enough for tomorrow. Again, we have to let the market tell us. But for sure, I think we need to break again back below before 46.25, before all is said and done. So under new lows, this could hold 46.22. It would put in a new low, and we could, if the structure agrees, we could put a 5 there and then call it a day. So again, for tomorrow, I think that we may be slow, but we may have a lot of volatility because remember, and a lot of these bigger stocks that are moving around, when they move around and they go through strike prices on an expiration day, there's a lot of position adjusting that will take place, as options are on expiration day doomed to go either to zero or have some value, right? Depending where that strike price is and the underlying price is. As it gets closer to a strike price, there's a lot of position adjusting. We'll trade smart. I'm going to say continue to trade smart, and use the moving averages, use the Elliott, use the Fibonacci, and have a good trading day tomorrow. The next update will be on Sunday, the 14th.